Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. It's great to have you back with us. Today, we're going to really get into the details, pull apart the recent Q2 2025 earnings call from Advanced Micro Devices, AMD. Now, I know earnings calls can sometimes sound, well, a bit dry, just numbers. But honestly, for us, they're like treasure maps, seriously. You find so much more than just the figures. You get insights into strategy, market shifts, where the tech is headed. So our mission today, let's unpack AMD's latest performance numbers, explore their, frankly, huge plans in AI, and try to understand the semiconductor landscape through their eyes.
Yeah, and AMD is really right in the thick of it. I mean, think about AI, high-performance computing. They're central to these massive tech trends. This call, it happened August 5th, 2025, so it's fresh data, and it gives us this really detailed picture.
Yeah.
What's fascinating, and what we'll get into, is just how much is packed in there. You've got record sales in some areas, yeah, but also strategic buys to boost AI, and even this whole tricky situation with export controls. It's a lot.
Okay, let's start peeling back those layers then. The headline numbers for Q2, $7.7 billion in revenue, up 32% year over year. Looks great on the surface. But like you said, there's always more to it. What's really going on beneath that big number? Any challenges or subtleties we should be aware of?
That's exactly the right question. Because, yeah, $7.7 billion is a record. That's a big jump, 32% year over year. Tells you they've got momentum. And they were up 3% from Q1, too. So it's not just a yearly thing. It kept climbing. But here's the subtlety you mentioned. Their EPYC server CPUs and Ryzen PC chips, record sales, huge drivers. But their Instinct GPUs, specifically the MI308 for AI data centers, took a hit. And that was directly because of those export controls we mentioned.
Oh, okay. So record revenue overall, but not all segments firing on all cylinders equally. Makes sense. Now, what about gross margin? That's always key. The reported number was 43%, which looks like a pretty big drop from 53% last year. Is that a worry? Or is there context?
That's probably the most important piece of context from the whole call. Yeah, 43% looks like a dip. But here's the thing. That number includes a massive $800 million inventory write-down.
$800 million. Wow.
Yeah. And it wasn't because the chips were bad or nobody wanted them. It was purely due to the U.S. export rules hitting those MI308 sales, mainly the ones headed to China. So if you take out that charge, which is what they call a non-GAAP adjustment, basically showing the core business performance, the gross margin was actually around 54%.
54%. Okay, that's a completely different picture.
Exactly. And get this, that 54% marks their sixth straight quarter where the non-GAAP margin improved year over year.
6 quarters in a row.
Yep. So underneath that one-time hit, their actual profitability on the stuff they are selling freely is getting better. It's because they're selling more high-end stuff, a richer product mix, as they call it. More EPYC, more premium Ryzen.
Okay, that clarifies things hugely. So not a core business issue, but an external factor hitting that one number. Got it. But what about spending? Operating expenses were up 32% too, to $2.4 billion. That sounds like a lot. Is that just cost running away, or is it deliberate investment? And how did that affect the bottom line, the earnings per share?
It's definitely deliberate. That 32% jump, yeah, it's big, but it reflects AMD really leaning into investment. They're spending more on go-to-market, basically, sales and marketing, and critically on R&D research and development. And that R&D spend is laser-focused on AI, building the next generation of products. So it's spending for future growth, you know?
Right. Investing now to hopefully reap rewards later.
Precisely. Now, for the bottom line, operating income did drop year over year, $897 million versus $1.3 billion. And earnings per share, EPS, was $0.48 compared to $0.69. But again, that big inventory chart is the main culprit. It knocked about $0.43 off the EPS figure by itself.
43 cents just from that charge.
Yeah. So if you mentally adjust for that, the underlying profit picture looks much healthier, reflecting the core business strength, not those external pressures.
Okay. And what about cash? Do they generate cash?
Oh, yeah. That was another bright spot. Record free cash flow. $1.2 billion this quarter.
Yeah.
Which is really strong. It shows they're running efficiently and have plenty of cash on hand to fund all that R&D and expansion we talked about. Good operational health there.
All right, let's pivot to the data center segment.
Yeah.
This feels like the real battleground, the engine for AMD, especially with this whole AI explosion happening. This is where the heavy lifting for AI models happens, right? So
yeah.
How's AMD doing here? What are the strategic plays in this AI race.
Absolutely. Data center is the powerhouse. It's central to everything for them right now. So let's break it down. First, EPYC CPUs. Revenue there was $3.2 billion. That's up a solid 14% year over year. Now, it was down 12% from Q1, but again, that's mostly those export controls hitting certain lines. Despite that, demand across the board for EPYC is really strong, powering cloud, enterprise, and increasingly these emerging AI infrastructure needs.
And they mentioned something interesting, agentic AI. What's that about? How does that affect CPU demand?
Yeah, that was a fascinating point they made, the agentic AI idea. Basically, think about when an AI like ChatGPT generates an answer, a token. That single output from the GPU doesn't just happen in isolation. It actually triggers a whole bunch of tasks on the CPU side, managing the process, orchestrating data, things like that.
Ah, okay. So more AI activity means more work for the CPUs too,
Oh.
not just the GPUs.
Exactly. Even as GPUs do the heavy math, the overall AI workflow needs more and more general purpose compute. So it drives demand for chips like EPYC. It makes the CPU even more critical in the AI era.
That's a key insight. So how's that translating into EPYC's market performance? Are they actually winning business?
Oh, absolutely. They saw a big ramp in shipments of their latest 5th-gen EPYC, codenamed Turin, and still strong demand for older generations, too. This led to record sales for both cloud and enterprise CPUs. And here's the kicker, 33 consecutive quarters of year-over-year server CPU market share gains.
33? That's what, over 8 years?
Yeah, it's incredible. It signals a real long-term shift. They're consistently taking share in a market that used to be dominated by one player. It shows their products are resonating deeply. For you listening, this means AMD isn't just a competitor anymore. They're actively reshaping data centers.
So where are these wins coming from? Cloud? Enterprise?
Both, really. Cloud is huge. The big hyperscalers, Google, Microsoft, Oracle, Amazon, they're using more EPYC for core services and public cloud offerings. They launched over 100 new AMD-powered cloud instances just last quarter, some using the new Turin chips, offering like up to double the performance of the previous gen. Globally, there are almost 1,200 different EPYC cloud options now, and that's driving enterprise adoption in the cloud too. Big wins in aerospace, finance, retail, energy. You name it.
Okay, so cloud is strong. What about traditional enterprise, companies running their own data centers and other areas?
Yeah, strong there too. Big server makers like HPE, Dell, Lenovo launched 28 new platforms based on the Turin chip. They saw significant growth in on-premise deployments, winning deals with major companies in tech, auto, manufacturing, finance, public sector. It's broad-based. They even launched a new line, the EPYC 4005 series, aimed at smaller businesses and hosted IT providers, bringing that enterprise performance down to more cost-effective platforms, and even telecom. KDDI in Japan is using EPYC for 5G networks. Nokia picked EPYC for its core network platform, so it's really penetrating everywhere.
And supercomputing. HPC, I know they've been strong there.
Dominant, really. They power over a third of the world's fastest supercomputers now. El Capitan is still #1, Frontier #2, both AMD powered, and it's not just speed, it's efficiency. On the Green 500 list, which ranks by energy efficiency, AMD powers 12 of the top 20. That performance per watt is critical for these massive machines. So yeah, they're very bullish on the server CPU business. Growing demand, share gains, plus that underlying AI infrastructure build-out all point upwards for EPYC.
That's a really compelling story for EPYC. Okay, let's shift to the other side of the data center coin, the Instinct AI accelerators, the GPUs. You said export controls hit MI308 sales there? What's the plan now? How are they competing with their newer Instinct chips?
Right. This is where the AI arms race gets intense. So yeah, data center AI revenue, meaning Instinct sales, it declined year over year because those MI308 sales to China basically stopped due to the restrictions. They're navigating this by pushing forward with the next generation, the MI350 series. But even with the MI308 issue, they made good progress with the existing MI300 and MI325 chips. New wins, wider adoption with big cloud providers and AI companies. And here's a strong validation point. 7 out of the top 10 AI model builders are using Instinct now. That says a lot about the performance and, crucially, the total cost of ownership, the TCO.
Okay, so the MI350 is the next big thing for them. What makes it competitive? How does it stack up?
The MI350 is critical. They just launched it. Key features are industry-leading memory bandwidth and capacity. Basically, how much data it can chew through and how quickly. Vital for huge AI models. Adoption looks broad already. Hyperscalers, AI firms, server makers. Competitively, here's their pitch. They claim the MI355 chip matches, or beats NVIDIA's B200 in key workloads, and delivers similar performance to NVIDIA's bigger GB200 system, but And this is huge at a significantly lower cost and complexity.
Lower cost and complexity. That sounds like a direct challenge.
It absolutely is. Think about data centers spending billions on AI gear. If AMD can offer comparable performance for less money and less hassle integrating it, that's a powerful argument. It could genuinely shake up pricing and dependency across the industry. You, listening, should watch this space closely. It could change the economics of AI buildouts.
And are they just selling the chips or offering more integrated solutions?
More integrated, they're really pushing system-level capabilities, combining the MI350 with EPYC CPUs and their own networking tech, like that massive Oracle deal. Oracle's building this huge AI cluster, over 27,000 nodes, and it's using AMD's MI355X GPUs, EPYC Turin CPUs, and their Polaris Smart NICs, a full AMD stack at enormous scale. And good news for them, they started volume production of MI350 ahead of schedule back in June. They expect a really steep ramp in the second half of this year to meet demand.
That Oracle win is massive, yeah. You also mentioned sovereign AI engagements earlier. That sounds intriguing, almost geopolitical. What's that about?
It is intriguing, and yes, definitely has a geopolitical angle. Sovereign AI is basically countries building their own national AI infrastructure for security, economic reasons, fostering local tech. AMD is seeing a lot more of this. Over 40 active engagements globally last quarter. The big example is that multi-billion-dollar deal with Humane in Saudi Arabia. They're building AI infrastructure using only AMD tech CPUs, GPUs, software. Deployments are already starting. For you, the listener, this shows nations see AI infrastructure as strategic. And AMD's more open approach often makes them an attractive partner for countries wanting to build these capabilities themselves. Though, of course, navigating regulations is always part of it.
Okay, hardware is one thing, but what about the software? AI needs a strong software stack. How's AMD doing with ROCm, their alternative to NVIDIA's CUDA?
Crucial question. Hardware is only half the battle. They've made significant progress with ROCm. They just announced ROCm 7, big upgrades. They're claiming like 3x better inference and training performance than the previous version, plus better support for huge models, distributed computing, different data types, all essential stuff.
Is it easier for developers to use now? That's been a criticism in the past.
They're working hard on that. They launched nightly software builds for quick updates and expanded access to compute resources, including their first developer cloud. Think of it like a ready-made sandbox online, pre-configured setup so developers can just jump in and start using AMD GPUs instantly. That lowers the barrier to entry. They've also got more frameworks supporting ROCm natively now, like VLLM and SGLang. And importantly, new big models like Llama 4, Gemma 3, they had AMD support right from day one. Day zero support is key for adoption. And for businesses, they rolled out ROCm Enterprise AI, a full package to help companies integrate and scale AI more easily. It's a much more complete software story than it used to be.
Sounds like serious progress on software. And looking even further ahead, what's next after MI350?
They're already talking up the MI400 series. Development is apparently going fast, described as their most advanced GPUs ever, big numbers being thrown around, 40 petaflops of AI performance, 50% more memory, bandwidth, scale-out throughput, really pushing the envelope. And with MI400, they're introducing Helios. This isn't just a chip. It's a full-stack, rack-scale AI platform.
Rack scale, so like a pre-built AI supercomputer unit.
Exactly. Designed specifically for the most intense AI tasks. Each Helios rack connects up to 72 MI400 GPUs, working together as one giant accelerator. They're expecting like a 10x performance jump over the previous generation for the biggest models, aiming for it to be the world's highest performance AI system when it launches in 2026. And they say there's already strong interest from major customers for huge deployments of Helios in 2026.
So AMD's vision is clearly way beyond just selling chips. It's full-stack rack-scale AI solutions. That's a massive undertaking. How are they actually building the capability to do that? Is it all in-house, or are they buying expertise?
It's a mix. They're investing heavily internally, yes, but also making very targeted acquisitions. On the software side, they picked up teams from Brium and Lamini recently, adding to earlier buys like Nod.ai, Mipsology, Silo AI. Each one brings specific pieces to strengthen that ROCm software stack. It's about accelerating development and plugging gaps faster than they could organically.
Makes sense. And on the hardware system side?
That's where the acquisition of ZP Systems comes in. That happened in Q2. It brought them a top-tier team focused on designing entire data center racks and systems. This team is already integrated and working with customers on deploying those big Helios systems. It's about delivering the whole solution, not just the components. And related to that, they announced that Sanmina, a big manufacturing partner, plans to buy ZT's U.S. manufacturing operations for $3 billion in cash and stock.
So AMD sells the design expertise to Sanmina.
Well, Sanmina buys the manufacturing part of ZT that AMD acquired. This makes Sanmina the lead manufacturing partner for AMD's AI racks. It lets AMD focus on the design, the IP, the software, while leveraging Sanmina's scale for actually building these massive systems. It's a smart way to manage resources for such a huge build-out.
Got it. And just quickly circling back to the regulatory side, that MI 308 review for China sales. Any update?
Still ongoing, as far as the call indicated. The U.S. Department of Commerce is reviewing the export licenses. AMD's Q3 forecast doesn't assume any MI 308 revenue, just to be conservative, but they sounded hopeful they'll get the licenses approved eventually and can resume those shipments. It just highlights the ongoing uncertainty in global trade for these advanced chips.
Okay, let's shift gears now. Away from the data center complexities, let's look at the client and gaming markets. The PCs and consoles closer to home for many of us. How did AMD fare there? Sounds like a different story from the embedded segment's gradual recovery.
Yeah, a very different and much stronger story this quarter. Client and gaming together brought in $3.6 billion. That's up a massive 69% year over year and up 23% just from Q1. Huge momentum.
69%. Wow. What drove that?
Let's break it down. First, the client business, that's mostly PC chips. Record sales here. $2.5 billion in revenue, up 67% year over year. Desktop CPUs were particularly strong. Their Ryzen 9000 series, especially the gaming-focused X3D versions, were apparently flying off the shelves, topping bestseller lists globally.
The gamers and enthusiasts are snapping those up.
Definitely. And they launched new Threadripper chips, too, for the high-end workstation market. Up to 96 cores now, claiming double the performance for things like video editing, 3D design.
96 cores, that's incredible.
Yeah.
What about laptops?
Laptops were strong, too. They saw large double-digit growth in notebook sales year over year. And importantly, they sold a richer mix, meaning more higher-priced premium laptops. That's where their Ryzen AI 300 chips are playing, bringing AI features directly onto the device. Better performance, better value, especially in those thin and light premium notebooks.
And the business PC market, commercial side.
Growing fast, too. PC makers bought over 25% more AMD commercial chips year over year. They saw strong sales through partners like Lenovo and HP, and Dell is ramping up its AMD offerings, too. Plus, new wins with big enterprise customers, Forbes 2000 companies in pharma, tech, auto, finance, aerospace, healthcare. So Ryzen is making serious inroads into the corporate world. Overall, they're confident they can keep growing PC chip revenue faster than the market, thanks to strong products, commercial gains, and selling more premium parts.
Okay, that covers the PC side. What about gaming specifically? That was up strongly too, right?
Yep. Gaming revenue hit $1.1 billion, up 73% year over year. A big piece of that was semi-custom. Those are the chips for game consoles, primarily. Revenue there saw a large double-digit jump. Why? Basically, console inventories got back to normal after shortages, and companies like Sony and Microsoft are stocking up for the holiday season, preparing for strong demand.
And speaking of consoles, any news on future partnerships?
Big news, actually. A new multi-year deal with Microsoft. AMD will provide custom chips for next-gen Xbox devices, consoles, PCs, even handhelds. That locks in a huge customer for years. They also deepened their work with Sony through something called Project Amethyst, using machine learning, co-engineered with Sony to create more immersive gaming experiences.
Interesting. And PC gaming graphics cards, the Radeon line.
Demand was very strong there, too. For the latest Radeon RX 9000 series GPUs, sell-through, meaning actual sales to gamers, accelerated. Demand was actually higher than supply.
So they could have sold more if they had them.
Exactly. They launched a new mainstream card, the Radeon RX 9060 XT, based on their latest RDNA 4 architecture, offering significant performance uplift, especially in things like ray tracing, more than double the prior gen. And connecting back to AI, they also introduced a card called the Radeon AI PRO R9700. This isn't purely for gaming. It's designed for AI tasks on the desktop running models locally, fine-tuning them. It has more memory, full RECM software support. It can link multiple cards together, sort of blurring the lines between gaming hardware and pro AI workstations.
Fascinating how AI is permeating even their gaming products.
Okay.
Great performance in client and gaming. Let's briefly touch on the last piece, the embedded segment. You mentioned a more gradual recovery there. What's the situation?
Yeah, embedded is on a different path. Revenue was $824 million, down 4% from last year, but importantly, flat compared to Q1, so stabilizing. It reflects a slow, gradual demand recovery. Some markets are strong, like automotive, but others, especially industrial customers, are still working through inventory they built up previously, so pockets of softness are offsetting the strength elsewhere.
Are they still innovating in embedded despite the slower market?
Oh, yeah. They started shipping their new Spartan Ultrascale Plus FPGAs. Those are programmable chips for things like factory automation, security cameras where you need good performance, security, but also low power and cost. And they highlighted a cool win for their Versal chips. Those are more advanced adaptive SoCs. Bosch is using Versal in its next-gen robotaxi platforms in Europe.
Robotaxis. What does Versal do there?
It acts as the main controller, handling real-time processing, security, encryption, all the critical stuff needed for a self-driving electric vehicle, shows Versal tackling really complex high-end applications.
So what's the outlook for embedded? Will it return to growth?
They expect it to. They see demand improving in areas like test and measurement equipment, communications gear, and aerospace. That should drive a return to sequential growth in the second half of this year. And longer term, the pipeline looks good. Design wins, meaning future business they've secured, are tracking ahead of last year. They think they're on pace to beat the record $14 billion in design wins they got in 2024. So future revenue streams are building, even if current growth is slower.
Okay, let's try to pull all these threads together now. We've got record overall revenue, but some segment variations, huge AI focus and investment, a strong client and gaming resurgence, and a recovering embedded business. What's the big picture message AMD is sending about its future? How does this all feed into that massive tens of billions AI target they keep mentioning?
The overarching message is definitely one of strong confidence and a clear strategy for growth. They see really robust demand pretty much everywhere. They expect significant growth in the second half of 2025. That'll be led mainly by that big ramp up of the MI350 AI accelerators we talked about, plus continued share gains from EPYC and Ryzen. So server and PC businesses accelerating, embedded in gaming getting back to growth. It's a pretty positive picture across the board.
And what about the next quarter specifically? Q3, what are they guiding for?
For Q3 2025, they're targeting revenue around $8.7 billion, give or take $300 million.
Okay, $8.7 billion. How does that compare?
The midpoint, $8.7 billion, would be about 28% growth year over year. Pretty strong. Sequentially, compared to Q2, that's about 13% growth. And the drivers, strong double-digit growth in data center, mostly that MI350 ramp, modest growth overall in client and gaming client up, gaming kind of flattish, and embedded returning to sequential growth.
And the non-GAAP gross margin. They expect 54% again for Q3. How are they maintaining that level even while ramping a brand new product like MI350, which can sometimes dilute margins initially?
That's a really sharp point. Ramping new complex chips can hit margins. The fact they expect to hold 54% is significant. They attribute it to continued strength in those high-margin areas, server CPUs and commercial PCs, plus ongoing operational efficiencies. Basically, the profitable parts are growing enough to offset any initial margin pressure from the new AI chips. Operating expenses are guided slightly up again, around $2.55 billion non-GAAP, reflecting that continued strategic investment, especially in AI R&D.
Okay, let's talk about that tens of billions AI ambition. It sounds huge. What gives them the confidence they can actually hit that kind of number in the long run?
It is huge, and it's definitely a long-term goal. Their confidence seems based on a few things. One, the strength of the MI350 product itself. Two, the positive feedback they're getting on the next generation, MI400. And three, feeling ready for truly massive scale deployments, training, and inference. To hit that tens of billions level, they specifically mentioned needing significant gigawatt scale type deployments.
Gigawatt scale, like power plant levels of energy for data centers.
Pretty much. It underscores the sheer scale of AI infrastructure the world is building and the massive opportunity AMD sees if they can capture a significant chunk of it. They're talking about data centers consuming energy like cities, and they say they're working closely with the key customers who are planning these kinds of builds.
But surely it's not easy. What are the main hurdles? Is ROCm, their software, really ready to compete head-on with NVIDIA CAD at that scale?
Yeah.
What about just producing enough of these incredibly complex chips and systems? The lead times must be long.
Those are absolutely the challenges. AI models are getting more complex, needing distributed approaches, which makes the whole system architecture scale up and scale out critical. AMD's betting their full stack approach, from chips to racks, gives them an edge here. On ROCm, look, it's made huge progress. ROCm 7, the developer cloud, day zero support, it's closing the gap. Is it CUDA yet? No, CDA has decades of history. But AMD's open approach is attracting developers and customers wanting alternatives. It's a different strategy that could pay off. And lead times, yeah, they acknowledge they're significant. Around 8 or 9 months for Instinct products because they're so complex to make. That means they have to work super closely with customers, especially for things like the MI400 Helios rack system. It's deep co-development, ensuring the hardware fits perfectly into these massive data center plans that are years in the making. It's partnership, not just selling chips.
Okay. And financially, how are they managing all this investment alongside things like returning cash to shareholders? You mentioned that ZT manufacturing sale to Sanmina.
Right. That $3 billion deal, cash and stock, closing end of 2025, is part of it. It brings in cash and lets AMD focus its own capital on core design and IP. Their stated priorities are clear. Number one, invest heavily in the AI opportunity. Number two, return cash to shareholders. They bought back $1.2 billion of stock in the first half of the year. They just got authorization for another $6 billion in buybacks, leaving them with $9.5 billion total authorized. So they have a strong balance sheet and a clear plan to both fund growth and reward investors.
All right, this has been incredibly detailed. To wrap things up, after digging through all of this, what's one key takeaway, something for you, our listener, to really chew on? What's the big shift this call signals?
Well, despite that bump from export controls heading one product line, the MI308, I think the bigger story, the real takeaway, is just how fast AMD is moving on its next generation AI tech and how quickly customers seem to be adopting it. So, for you listening, maybe ponder this. What does it really mean for the whole tech world when a company like AMD isn't just, trying to compete in AI, but is actively trying to shape the entire infrastructure? From the silicon itself up to full data center wraps like Helios and backing it with an open software stack like ROCm that's getting better all the time. How could that kind of comprehensive full stack approach maybe, just maybe, fundamentally shift the balance of power in the AI landscape over the next few years? It could really challenge the status quo and open up competition in ways we haven't seen before. Something to think about.
Thank you so much for tuning in to the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.